So a fundamental question is what drives the stock market? Why do stock prices move up and down every day? Is it fundamental factors, such as profits and dividends, or is it psychological factors, such as sentiment? Now, in 2020, we often are looking today at the fact that it's now the 50th anniversary of Milton Friedman. So in 1970, he famously wrote this controversial article arguing that companies should focus entirely on profit and not on wider society. But I'm actually not going to talk about that today because I talked about that in my first Gresham College lecture series on how business can better serve society. But there was another very influential article written in 1970, and if there wasn't so much focus on Friedman, I think there would be much more focus on the fact that this is also the 50th anniversary of that article. And that article was by another professor of economics and finance called Eugene Fama. And he was also of the University of Chicago, and he famously wrote in 1970 that stock markets were efficient. And what he meant by that was that they take into account all available information when forming stock prices. And so I think this might be the only equation that I have in the slides, so don't worry about this butch equation.